Let me consider the advantages of bond funds. Why bond fund could be a perfect addition to your investment portfolio. Number one is a steady income. Steady income. Bond funds provide regular income through interest payments from bonds in their portfolio, making them attractive for income-focused investors. For investors who prioritize income over capital growth, over capital appreciation, then they should be investing in bond funds. That regular interest comes in because of the constituents are bonds in the portfolio. Issue interest coupons regularly, and the investor stands to benefit. Number two is diversification. When it comes to the matter related to diversification, you discover that by investing in a variety of bonds across issuers, across sectors, and with different range of maturities, you discover that bond fund reduces the risk associated with holding individual bonds. The risk is not really comparable. If you own an individual bonds and the issuer or issuers default, it will affect you tremendously. When you invest through a bond fund, even if one or two of the issuers their default, other ones could still compensate for such problems. Number three is professional management. Bond funds are managed by professionals who have expertise in selecting bonds and managing interest rates and credit risk. These are specialists. These are experienced managers in the area of bond investments. So they know how to manage risk. They know the kind of bonds to buy. They know how to, to be able to combine bonds of different risk level as well as different maturity periods into a single portfolio. So they are professionally managed. And that's a very big advantage. Number four is liquidity. Bond funds can be bought or sold, on any trading day, in the open market at the prevailing net asset values, offering flexibility and access to the fund. So anybody that wants to invest can very easily invest through the open market. You simply buy your desired units and you are a bond fund holder, unit holder. Number five is accessibility. Investors can start investing in bond funds with relatively small amounts of money. You don't need to be a high net worth individual. Anybody, I and you, can easily invest in these funds, making them accessible to a wide range of investors. So it's quite accessible, unlike instruments like commercial papers that targets high net worth individuals, unlike hedge funds that are for accredited investors. These ones is virtually for smaller investors like I and you could participate in this vehicle. Number six is risk mitigation. Risk mitigation. Bond funds are generally less volatile than equity funds. They don't fluctuate like the stock market, like equities, like equity funds. Providing a safer investment option, especially during market downturn. When the market is down, then the bond fund provides a decent level of stability. Number eight is inflation. Number seven is variety of options. They come in different forms, different classes, different types. You know, so investors can choose from various types of bonds. You have such as government bonds, you have corporate bonds, municipal bonds, or high yield bonds, known as junk bonds, depending on their risk tolerance and their investment goals. So that will determine the kind of bonds you will go for, the kind of bond fund you will go for. Number 8 is inflation protection. Certain funds, certain bond funds, such as and those investing in inflation-linked bonds, help protect against inflation by adjusting returns in line with the inflation rate. This is fantastic. The coupon rate is not fixed as such, but it's adjusted based on the prevailing inflation rate. So you are a bit safe when it comes to these kind of inflation adjusted or inflation linked bonds. I think it's a very good investment. Number 10 is tax advantages. Some bond funds, like municipal bond funds may offer tax-free income or favorable tax treatment in certain jurisdictions. Probably if you are within, the place the bond is being issued, you could obtain a kind of, tax exemption. You could be exempted from paying tax on your returns. Number 10 is cost efficiency. Please don't forget to like this video and subscribe to this channel. So you have cost efficiency by pooling resources together. Bond funds, allow investors to access a diversified portfolio of bonds at a lower cost compared to buying individual bonds. So that cost efficiency should be factored into the equation when it comes to decision to invest in bond funds or not. Number 11 is stability. There is stability. Compared to equities, bond funds tend to provide more predictable returns, making them a suitable choice for conservative investors. People don't want headache. They don't want wahala. They prefer stability to capital appreciation. Then this is a very good candidate. Number 12 is reinvestment options. Many bond funds offer the options to reinvest distributions, helping investors compound their returns over time. Some of them, there's that leeway, that advantage, that you have the rights to reinvest instead of spending your coupon, your interest, you can reinvest it in the fund. That will compound over time and give you a higher rate, over a long